All right, let's get straight to it. We are tracking a critical signal coming out of the Asian close. We call it the physical mode paradox. And tonight, it's going to tell us exactly where the smart money is moving before Wall Street even has its first cup of coffee.
So, here's the puzzle we're decoding. Foreign capital absolutely fled the Korean market. That's a classic risk-off signal, right? It means big money was dumping assets and running for safety. By all accounts, the index should have been crushed, but it wasn't. One single asset acted like an anchor, holding everything up, and our mission is to understand why.
And this heat map, well, it shows you the battlefield. It is just a sea of red as broad market fear took over. But you see that island of bright green? That's Samsung. And this wasn't just about survival. This was a full-on signal activation. What you're seeing is a clear decoupling. That's when a key asset breaks its correlation and moves completely against the market tide. You gotta know, that is a massive tell. What we're witnessing here is a fundamental conflict. You've got the high-level macro picture, totally spooked by rising US yields, and it is screaming sell. But then you have the physical supply chain, the actual bedrock of the entire AI infrastructure, and it is screaming buy. Now, these conflicting data points, they create a ton of confusion for most traders. So right now, we're gonna do what we do best, separate the core signal from all that background noise. So there are two totally opposing forces at play. On one side, you have the macro tourists. They're just tactically selling the entire Korean index to hedge against rising interest rates in the US. Fine. But on the other side, you have strategic capital, and they are ignoring that noise completely to secure a critical piece of hardware infrastructure. See the difference? They're not buying the market. They are buying the node. And the data, it confirms this split perfectly. Just look at these numbers. Foreigners executed a massive tactical sell-off, dumping nearly $500 billion. At the exact same time, Samsung signal activated with a powerful plus 1.57% rally. This is the proof. This shows us there's a powerful underlying structural demand for the physical asset itself. And that rally, it pushed Samsung's market cap past a historic threshold. 1 quadrillion. 1. Look, this isn't just some corporate milestone. This is the market officially recognizing this company not just as a stock, but as a new class of sovereign, strategic assets. Now, this really unusual market behavior is explained by a theory we call the physical moat paradox. So let's break down exactly why physical hardware is becoming the new digital gold. So what is this paradox? It's actually pretty simple. When interest rates are high and money gets expensive, guess what? Investors stop funding dreams and they start buying real things. In the AI era, software can be copied, it can be replicated, but the advanced foundries that actually produce the chips, they are incredibly scarce. So capital is rotating out of speculative promises and it's concentrating on essential, tangible hardware. This image here visualizes that capital shift perfectly. For years, the scales were tipped way over toward the cloud, intangible software with big promises of future growth. But as rates rise, the physical weight of hardware, the tangible, irreplaceable production capacity, well, that becomes a far more reliable place to store your value. We call this the hardware vault effect. And what it means is that global capital is starting to treat these semiconductor fabrication plants, these fabs, as secure vaults. Think about it. In a world of geopolitical uncertainty and inflation, the ability to produce the world's most critical components is now seen as a safer store of value than fiat currency itself. And this slide right here shows you the direct link. On the left, that's the signal from Korea, Samsung's next-gen HBM memory. On the right, that's the core of US demand, Nvidia. One cannot function without the other. This isn't speculation, folks. This is the physical reality of the AI supply chain. So, time to translate. What does this incredibly powerful signal from the Asian close actually mean for the US Open? Let's bridge that gap from Seoul to Wall Street. The supply chain has already voted with its capital. It's done. This demand signal from Asia is locked in, and what that does is it provides a strong, fundamental floor for the key US hardware stocks that make up the rest of this critical infrastructure. The trajectory has been set. And this signal, it directly impacts what we call the US hardware core. We're talking about Nvidia, of course, the brain. Micron, another critical memory supplier. Applied Materials, which builds the actual machines that build the fabs. And Vertiv, providing the essential power and cooling. It's an entire ecosystem, and it's all linked. All right, let's move to the execution plan. This is your tactical briefing for the US session. Listen up. This is the only number you need to watch tonight. 25,500. That's it. This pivot level on the NASDAQ 100 futures is the ultimate judge. It's going to tell us if Wall Street accepts or completely rejects the signal from Asia. Here is the action plan. It is clean and it is simple. Step 1. You monitor the pivot at 25,500. Step 2. If it breaks above and holds, that's your confirmation. The signal is accepted by the US market. The mission is to get long AI infrastructure. But, step 3, if it breaks below, the signal is invalidated. Macro fear is in control. And the correct move is to stand down, move to cash, and hedge. So we end with this one question. The physical supply chain in Asia has spoken. It has signaled loud and clear that structural demand is real, and it has committed its capital. The only question left is, will Wall Street listen? Watch that pivot.